Hello, fellow traders. 'Tis I, the Rumpled One. It is Wednesday, May the 23rd, the year 2018. Let's talk trading. Why you do not get better at trading, part 3. Okay, on the first day, not practicing enough, not practicing consistently. Second day, we talked about the shiny object syndrome. Today, step by step, incorrect order. When you trade, are you doing things in a step-by-step fashion? And are you doing them in the correct order? I mean, it's really interesting when you think about it. What are your steps? Do you figure out your money and risk management first? How much you're willing to lose per trade? Do you change this? Do you sometimes take more risk or take less risk? Or do you always take the same risk? Remember, consistency. Now, what do you look for? Do you look for breakouts, reversals? Do you look for some signal from an indicator? Do you have these things written down? You know, our quote unquote trading plan. You have a plan for entry. Do you have your exit playbook? I mean, what do you have? And are you using them in the proper order? Now, one of the things that I think most traders forget to put in their plan, put in their checklist, is they fail to, quote, Cool Hand Luke, get their mind right. In other words, are you in the right frame of mind to trade? Are you totally focused in the present moment? Or are you worrying about something else, either a past trade or maybe something that has nothing to do with trading? Are you mentally prepared? Is that part of your step-by-step process? And if you don't do that first, if that isn't your first step, then how do you expect anything else to work? I mean, if you really think about it, are you like here now? Or are you focused on something that happened, last week when you were trading? I mean, it's so easy to do that. So the thing is, looking at the steps. First, get your mind. Second, make sure your money and risk management's in place. And then third, focus on your entry and exit. So you see how that works together? I sure hope so. If not, feel free to ask questions. And we'll talk about it as we go through the charts. So we've got our minds right. We've got our money and risk management right. So then we look and see, what do we have here? Well, if you remember, I believe, today's Wednesday. Let's see, Sunday, Monday, we were up here. We had a green candle. Now, what happened? We were in that weekly wick zone. We escaped, or price broke out to the upside. Now, look, it broke out to the downside. I mean, we're 60 pips off the daily low. We're 58 pips. Now, let's see. Yeah. And we're, 59 pips? So, that's over 100 pips. Right? I mean, if you would have taken that trade to the downside here, 110.72 down to 109.55, simple breakout trade. And as you can see here, we're getting some more fills. If you remember from yesterday, we've only got 1, 2, 3 pairs that haven't filled. And you can see some of the movement across the weekly open now. I mean, the other day, this was a positive number. So just if all you did was just use this one little chart here, right? And I keep forgetting to do this. And another thing I keep forgetting to tell everybody to do is, come down here and subscribe and click on the alert. So every time I put out a video, you'll get the alert. And then not all trading videos, sometimes I put out movie reviews and other stuff on my channel. But, on a daily basis, it's the trading videos, and you can just ignore the other ones or watch them if you like. So, I've got two instances here of the HL5. So we can get, one is just to get the open here, because if I say use two bars, then you're going to have more lines than what I want to see. But you can see here, simple thing. We can trade the open, we can trade the wick zones using this one chart. Don't need anything else. A weekly chart too. But look how strong that move was. We can do daily chart. I mean, once again, here we go. Break out of that wick zone. Simple, simple, Once again, we've got just yesterday's high, open, and low, and today's high, open, and low. But just that simple cross there. And look at the ranges on some of these. Look at that. This is daily. 305 pips, 187 off the open. I mean, that's a thing of beauty, isn't it? Just trading a simple open or simple breakout or wick zone trade. What more can you ask for? And the thing is about this, it happens every day. It's not one of those things you've got to wait for the trade to set up for days or weeks. No, every day we're going to get one of these trades. Now on the weekly, it might take a little time to get a breakout, but daily, no. And then once again, buy zone. Look at this. I mean, it crossed the weekly open here, got into the buy zone, stop was threatened but never materialized, and look at what happened. Harry hindsight, no. You can trade this at the open every day. It's going to be the same. These lines, the values may change, but it's always going to be 8 to 10 pips from the open in either direction. Very simple. You get your mind right. You say, if price enters here, I'm going to take it. I'm not going to second guess it. I'm not going to win. I don't know if I'm going to win or lose. There's no reason for me to look at anything, any other indicators or anything like that to take this trade. And if I lose, I lose. If I win, I have a potential of winning big. Okay. We have got ourselves a rat zone today. Once again, put in that low. You had opportunities to come out of the rat zone. You're 60 pips off the low, means you're 40 pips out of the rat zone. What more can I say? It was right there. You could have taken that trade. Pivot, guess what? Didn't fill it. But remember this pivot that got missed? Well, guess what? It got filled. Remember, I was saying to look for this. Now, it's not a hindsight. You can go back and check the videos from a couple days ago. I said look for that to be filled. I'm saying it now. Look for this one to be filled. Maybe not today, possibly tomorrow, or maybe next week. I don't know. But just look for it to be filled. And one of my favorites, the simple trading with the H1 candle color at the line. And you can see a 3-ball, green at the line or green at the line here. 10 plus pips to be made. Since we had a 3-ball, we can just say we're only going to trade green until we get another ball. And usually I like to wait for 2s or 3s. So here, if you just take the greens, you get the 1 ball, You can't, okay, well, it'll probably pull back some. You could have taken that trade because it was a double O or triple O trade, however you want to call it. And there was a 10 pip chance here again at the triple O line going to the north side. And even if you waited till here, you'd still be up about 6 pips. So at the 110.10 line. Well, actually, right now you'd be up 4 pips. But the point is, these trades are there. They're simple, but you have to have your mind right, have your money management, risk management right, step-by-step process here. Know your entry, know your exit, and execute. So if you're not doing those things, that's why you're not getting better at trading. You know, it's real simple for me to say, real easy for me to say, but the hard part is you controlling your mind. You getting out of your own way. You taking your ego out of the equation. Once again, H1 at the line, simple candle color trade. And you can see here are these wick zones on the daily. We've got a bunch of crosses, a bunch. And look at the monthly open cross. I mean, here, look at that, 80 on the upside, but we're 77 here, and we're down 75 on the weekly. Once again, money to be made. Wick zone, price doesn't like staying in the wick zone. This was drastic. This was huge. Once again, we've got the holo set up. Highest open started the day. Here's the lowest open. Once again, there were trades to be had. And you can see here, right now we're just waffling. What about a, I don't know, 4 pip range or so? Not much action at the moment. Once again, just looking at this. Oh, and for those of you wondering, I'm working on adding another column or two here to see, here's where the buying started. Here's how many pips you could be up had you taken that trade. And we're looking at the IRB lines. There were some nice trades here. Old Harry hindsight. We can even scrunch this down a bit. You can see right here, we had an upside trade. We had a downside trade. We had an upside trade. This downside trade didn't pan out, and we're breaking out on an upside trade as we speak, as I speak. So once again, we're proving another horizontal line setup that's proving to be possible. Because when you think about it, it doesn't matter if you're using squiggly line indicators or not. There's going to be a price where you enter the trade. And you can just consider that price as a horizontal line. Plot a horizontal line at that price. And if it crosses above it, you're going to take the trade long. Crosses below it, you'll take it short. It's pretty simple. It really is. But somehow, as traders, we seem to make things difficult. And how we make things difficult is why we don't get better at trading. So I hope today's message has helped, because remember, as always, it's not what you trade, it's how you trade it. TheRumpledOne signing off to drain the banks.